We appreciate your presence here this morning. I want to especially thank the Lord Justice, the President of National Industrial Court, Justice Kanye, the scholar of repute. Thank you so much, sir. We are honored to have you in our presence. God bless you. I also want to recognize the presence of our own President and Chairman of Council, CIBN, Professor Pius Olanrewaju, SCIB, PhD. Thank you so much, sir. This will be his first assignment since he was sworn in as the President and Chairman of the Council. Distinguished ladies and gentlemen, esteemed colleagues, it is with great pleasure that I welcome you to the third Acamb'S Stakeholders Conference 2024. Today's gathering marks a special and a pivotal moment for the banking and financial services sector in Nigeria, as we come together for the first time, arguably, to holistically discuss under one roof customer experience issues as they affect assessing banking and financial products and services in Nigeria under the theme Building Bridges, Collaborative Solutions for a Trusted Banking and Financial Services Experience. In a world where the financial landscape is continually evolving, our mission in Acamb'S and the larger banking and financial sector remains clear: to foster transparency, prioritize consumer welfare, and champion industry excellence. This conference serves as a critical forum to address and resolve key consumer issues, providing a holistic understanding of Nigeria's banking and financial services landscape. We acknowledge the symbiotic relationship that exists among the Central Bank of Nigeria and deposit money banks, represented by all the commercial banks in Nigeria, and other financial institutions and the regulators, and the vital players in the insurance and pension industry, including NICOM, PENCOM, as well as consumer protection agencies and the Nigerian Interbank Settlement System. Our objective today are ambitious yet essential. We aim to educate consumers and foster their ability to make well-informed decisions about banking and financial services. By creating a platform for open and constructive dialogue among consumers and regulatory bodies, the media, the financial institutions, Acamb'S strives to build mutual understanding and trust. Furthermore, we seek to reinforce the reputation of our industry, and as a representative of the banking and financial services sector, Acamb'S is dedicated to cultivating positive perception within Nigeria, Sub-Saharan Africa, and beyond. Ensuring regulatory compliance is another cornerstone of our mission. We are here to deepen stakeholders' understanding of existing and evolving CBN regulations, promoting a compliant and trustworthy environment. Innovation is also at the heart of our agenda. We must explore opportunities for progressive solutions that enhance customer satisfaction and inspire banks and other financial institutions to adopt forward-thinking approaches. You will all agree with us in Acamb'S that Nigeria's banking and financial services sector, which is marked by resilience, adaptability, and innovation, stands as a beacon of stability and amid economic fluctuation. The regulatory framework established by CBN ensures the sector's integrity, while collaboration with DFBs and auxiliary institutions like NICOM, PENCOM, and NIBS underscores the interconnectedness necessary for a robust ecosystem. As we move forward, consumer protection agencies will continue to play a crucial role in safeguarding public interest, ensuring fair practices, and nurturing a culture of transparency. This conference aims to bridge the past, present, and future, fostering collaborative relationship, transparency, and innovation. It is a testament to our collective responsibility to address consumer concerns and cultivate an inclusive, resilient, and consumer-centric banking and financial services landscape in Nigeria. I extend my deepest gratitude to all participants, speakers, the guests of honor, panelists, Acamb'S Expo, members, the media, CIBN, all our sponsors, the organizing committee, for their invaluable contributions. Together, we can build a more trusted and dynamic financial services environment. I welcome you warmly to the third Acamb'S Stakeholders Conference 2024. Let's make today a milestone in our journey towards a brighter future for the banking and the financial services industry. I welcome you to the Acamb'S Stakeholders Conference. Thank you for listening and God bless you.
Thank you very much. A special welcome from our president. Moving right along, I would like to invite the new CIBN president, Professor Pius Deji Olaniwaju, PhD, SCIB. Please clap for the properly so we don't keep ourselves on this building.
Thomas, you communicate bank's values and drive its perception and long-term reputation. Banks, in their bid to position themselves as the future-ready players, often align, their brand with long-term strategies. These strategies, in part, implemented by the dedicated professionals seated in this room today. I don't think the banking industry will be what it is today, if not because of you group of people. We have seen the logo of banks change within 24 hours in this country in the past. And I think you need to clap for yourself, for doing a wonderful job. And today, banking is no longer, Nigerian banks is no longer, the operation is no longer limited to the country alone. We operate in Africa, and we dominate Africa. And because we work hand in hand together, the AIOB today, is being the secretariat is in Nigeria. And it's because of the good work you are doing. So we commend your effort. So this brings us to the theme of this year's conference, building bridges. You have been building bridges. We pray that you will continue to build bridges, collaborative solutions for a trusted banking and financial services experience, which is not only timely but essential. Indeed, a closely knit collaboration between bankers and the distinguished professionals represented in this room has the potential, to significantly shape the banking industry by deepening the culture of trust, which is still lacking, upon which customers' loyalty, investors' confidence, and overall stability of our financial system rest. Furthermore, throughout history, collaboration has been lauded as a clear gateway towards success. And that is the truth. And the great American industrialist and the magnate, Henry Ford, once said, coming together is a beginning. Staying together is progress, and working together is the success. And the success we have recorded in this country today is not unconnected with the team spirit, with the teamwork, and that we have engaged in, which is in tandem with what Ford just informed us. This speaks to the heart of our gathering today. Similarly, the great American author, Helen Keller, emphasized the power of unity when he said, also we can do so little, together we can do so much. The reason why we have accomplished so much in the industry today, through your effort and the effort of the Institute, is because of our collaboration that has taken place over the years. Allow me to provide some brief examples of how collaborative solutions between our two great professions can further propel the banking industry. First, building brand loyalty. Marketing and communication professionals are often the first point of contact with the bank and contribute immensely towards building brand loyalty. There is no gainsaying in the fact that brand loyalty is very key to the success of banking industry. Positive engagements can result in customers sticking to the same bank over many years, while negative or below par communication standard could drive them away. According to 2023, Bain and Company survey of 29,805 consumers in 11 countries, consumers with high loyalty scores spend more with their bank, cost less to serve, and are more likely, to recommend, the banks to their friends and family. We want to commend your effort in building brand loyalty that we have enjoyed in this part of the continent for quite some time. 2 is the revenue generation. As previously mentioned, the first point of contact, potential customers have with the bank is usually with marketing professionals. You drive awareness of the bank's brand as well as their goods and services available. Your style of communication and how you market the product or service to a given audience will determine the success of that product. And we have seen this happening over and over, in the years past. It could also attract or repel potential customers. The more customers you attract, the more revenue the banks make. In recent times, digital marketing particularly has evolved into the indispensable engine of revenue generation. According to a 2018 Deloitte study, companies that invest in digital market strategy experience 2.8 times higher revenue growth, than those that do not. And this has been exemplified in the activities of some of the think techs that are even disrupting, the banking system today. And that is why any bank that is not having an eschatological view of what is going to happen in the future and refuse to innovate, we go into history. 3 is the achievement of long-term strategies. True professionals in this field understand their customers' ever-evolving tastes are changing, and work with the leadership of the bank to tailor services to meet those specific needs. It is you that identify this need before you pass the message across. You serve as an arbiter between the end users of those services and the bank itself. And if your information are distorted, definitely we won't be able to get the good result we are having now. So this aligns to the long-term strategy of the bank to build trust and reliability. This professional also safeguard to the best of their ability the reputation of the bank by engaging the public regarding the negative reviews and promoting positive development initiated by the bank. Ultimately, it is important to understand that our industry thrives on trust. It is the invisible force, that drives customer loyalty, investors' confidence, and the overall stability of our financial system. However, trust is not given. It is earned through consistent, transparent, and ethical practices over the years. A strong handshake between the banker and the communication and the marketing professionals will go a long way to build this trust, while at the same time offering top-notch banking services. This is why in my inaugural address just last Friday, the trust of this administration is anchored on the word legacy. And that's exactly what we are going to, myself and my team, the legacy team, we pursue logically to make sure that we are able to change, the ecosystem, to a better one. And in this legacy, my L, for example, stands for leading an innovative financial system. There is no gainsaying that the future of banking is based on innovation and creativity. And we will not relent our efforts. And we are going to demonstrate that, because if you want people to accept you, you must demonstrate the capability of being able to do what you're asking others to do. And already, our hands is already on the plow. As far as the institute is concerned, we are already digitalizing. And by God's grace, within the next 1 year, everything in this building will be digitalized to the glory of God. E, we are saying entrenching. Our E stands for entrenching ethics and professionalism and integrity. We know that there have been, we can be up and down. There are challenges within the industry. But nevertheless, that's why we use the word entrenching. We know that ethics is there, but we will go further to make sure that our members, demonstrate, ethical practices in carrying out the activities and serving the customers. We are aware of some of the challenges, and we are putting some structures in place to make sure that this is addressed through training, through advocacy, and the like. Also, G represents the gender, generational, and geographical diversity. We know that, thank God, for some years when some of us started in this industry, it was purely, a men affairs. But through advocacy and policy today, we can beat our chest that at least not less than 9 banks is being controlled by women today as the chief executive. And more will come under this dispensation by God's grace. A, accelerating institute vision and values. There are some visions that are very key to us. Transparency, honesty, responsibility, we want to make sure that those who we are producing for the industry, are already, they inculcated this, and they will demonstrate it well on the field. Why our C is competence in the banking and finance industry to aid national development. Before, there seems to be a gap, a lacuna between those in the civil service and in the industry. And we have determined this time around to make sure that this is bridged. And it gladdens my heart that when we were at Abuja last week, already the Minister of Budget and Economic Planning is already inviting us to participate. We cannot keep aloof and allow the less privileged, the less exposed people to be dictating for us. If they are not inviting us, we will invite ourselves. And thank God we made that move some years ago. They are already inviting us. And on the behalf of the industry, we will continue to do this. And more important is to talk about our future, which is why representing. That's youth and entrepreneurial engagement. The future. Anybody who wants to think about the future must be thinking about the younger ones. Whether we like it or not, in the next 10 or 15 years, some of us that are standing here may not be here, whether we like it or not. Not that we will die, but other people will be occupying this. Some people were in this platform some years ago, they are no longer there. So our focus is going to be seriously on the youth. And we started that during the last tenure of my predecessor. We started a program called the Gen Z Through Millennial Program. And we will consolidate on this and build an industry that when we look back, we see the army of younger ones who will do better and build an industry that all of us will look back in future and be able to say, we have laid a very good foundation. Looking beyond 2024, collaboration is not just about a buzzword. It is a strategic imperative. By working together, we can create synergies that ultimately lead to improved customer experiences. The Chartered Institute of Bankers of Nigeria is open to collaborations, and I thank God my brother Rashid has been doing that for years. We are still open for more collaborations, with you, by way of capacity building, sensitization, advocacy programs that will enlighten and draw attention, to the importance of our joint purpose, which is to build an economy that all of us will be proud about. As aptly put by Michael Jordan, talent wins a game, but teamwork and intelligence win the championship. We don't just want to win a game, we want to win a championship. Thank you for your keen attention, and I look forward to a fruitful discussion and outcome of this conference, which will be passed accordingly to the appropriate authority. Thank you for your rapt attention, and God bless you.
Please let's put our hands together again for Professor Olanrewaju. Thank you so much, sir. At this time, we will be inviting the Honorable Justice B.B. Kanyip, PhD OFR, who will be giving his opening remarks and a presentation. Honorable Justice Benedict Kanyip was appointed a member of the National Industrial Court of Nigeria from June 2000 to 2006 by the President, Commander-in-Chief of the Armed Forces of the Federal Republic of Nigeria. By virtue of Section 27 of the National Industrial Court NIC Act 2006, he became a judge of the NIC. The outcome of his research work has aided in policy formulation in the area of consumer law and practice. His research work on sales promotions assisted in the formulation of the regulations on sales promotions promulgated by the Consumer Protection Council. Honorable Justice, sir.
Thank you, MC. The CIBN president, I understand, is our chief host. The host, president of Association of Corporate Affairs Managers of Banks, the registrar who looks after us, members of council of CIBN who are here, distinguished participants, and my very good friend Kanayo, who at very short notice decided to come and see things for himself. I'm sure by the time we are through, he must be thinking of how he will put something on film. Thanks for coming. I want to thank the Association of Corporate Affairs Managers of Banks for the invitation to participate and deliver, to use the words of the invitation, a brief 5-minute remarks and being available for questions and answers, and being available for a short question and answer session in this 2024 Acamb'S Stakeholders Conference. Your website is silent on whether Acamb'S is a trade union or an association registered under Part C of the Corporate Affairs, Companies and Allied Matters Act. All it states is that you were founded in 1996 by pioneer communication professionals through encouragement by banks' chief executive officers with a joint purpose of collectively changing the not too positive perception of the industry back in the day, and restore ethics and public confidence in the sector. Your invitation letter to me acknowledged the strides made in the banking and financial industry, as well as the challenges inherent in catering to the diverse needs of banking customers, and then stated that the banking industry owes much of its success to your collaborative efforts as an individual. That's they were referring to me now, and as president of the National Industrial Court. Since my background straddles tax law, consumer protection, and labor law, and given the theme of the conference, I do not know if the 5-minute remarks expected of me should be restricted to labor issues, or I should, in general, in my remarks, or I should be general in my remarks. I choose the first, to be general, and then more specific to the world of especially banking work. Banks, alongside other financial institutions, are critical to development. And so financial services are the core of any economy. They provide the infrastructure needed to develop other markets. Banks provide credit to economic actors, and insurance business creates a safer environment in which commerce and industry can develop. Investment services, which may be provided by a bank, insurance company, or some other financial institution or advisor, completes the tally. As strategic as the financial sector is, its stability must be ensured and financial inclusiveness elevated to a right. But the banking sector suffers from a number of practices which call for concern. A few examples will suffice. 1, automation of banking services. As useful as this is in making banking business more convenient for customers, comes with it so many hidden charges. I often wonder why my bank, I won't tell you the name, sending me an alert relating to a transaction should charge me the cost of sending the alert. When I send an alert to a friend, I bear the cost. Why should my bank not bear the cost of alerts and charge them as cost items in its banking business? which would then qualify as deductible expenses for tax purposes. The same may be said of the account maintenance charge I get every month from my bank and upon which value-added tax is deducted. How is my account maintained to warrant this charge? 2, the practice of giving employees targets in sourcing for deposits. This in itself may not be a problem, though it is often a nuisance to those of us that are contacted for such deposits. The problem, however, is when those employed and given targets are in the main female employees. Aside from this, raising issues of discrimination in the workplace, especially where male employees are not so employed. The fact that it is female employees who often dress seductively that are unleashed on the unsuspecting public is a cause for concern. I must admit that in recent times, this practice is on the wane. 3, the practice of concentrating on short-term financial investments as against long-term and real sector investment. Financial markets need to become less, not more efficient. This sounds like heresy. The problem with financial markets today is that they are too efficient. The financial sector has become more efficient in generating profits for itself in the short run. Given the liquidity of their assets, the holders of financial assets are too quick to respond to change, which makes it difficult for real sector companies to secure patient capital that they need for long-term development. The speed gap between the financial sector and the real sector needs to be reduced. This means that the financial market needs to be deliberately made less efficient. The financial sector has grown much faster than the underlying economy. The very liquidity of financial assets makes them potentially negative for the rest of the economy. Unlike real sector assets, financial assets can be moved around and rearranged in seconds. Financial capital is often impatient and seeks short-term gains. Exactly because finance is efficient in responding to changing profit opportunities, it can become harmful for the rest of the economy. Coming more specifically to the world of banking work, I must preface my remarks with the fact that the third alteration to the 1999 Constitution, in coming with a new labor jurisprudence, to use the words of His Lordship Sirajo, is a game changer. His Lordship would go further to elaborately state, and I quote, "The court takes judicial notice of countless labor-related animosities which may hamper industrial relations if left to fester, hence the enactment. The contemplation of the drafters appears more in their preference for the lower court, the National Industrial Court, to take a proactive stance in ensuring that the nation will not be left out in the reckoning of the Committee of Nations in the area of robustly flourishing labor practices and industrial relations. The court hereby reiterates that the clarion call is to the stakeholders in labor and industrial relations to strive in order to conform with the international best practices as obtainable in the field," unquote. These words, though general to the world of work, applies with stronger force to the world of banking work. Hence, His Lordship Oguwumiju JSC would in a recent decision of the Supreme Court, Skybank PLC versus Ade concur in the following words, and I quote, The new jurisprudence in labor relations cannot be ignored as the law is not static. The circumstances of each case and the motive of the employer is now a considerable factor in cases of wrongful dismissal. The new labor jurisprudence with the third alteration to the 1999 Constitution and provisions of the law in that regard, particularly Section 7(6) of the National Industrial Court Act, mandates that every court in the land shall have recourse to good or international best practices in labor or industrial relations. There is no doubt that the policy of the legislature to introduce new labor relation principles and international best practices into the adjudication of law in employment and labor relations is yet a fluid policy, merely pointing the judex to the new road to follow. There must not be confusion, unquote. Last year, the same Justice of the Supreme Court, in a matter the cause of action of which arose in 1995, long before the third alteration came, and dealing with the issue of restructuring exercise in a concurring judgment, was quite specific in saying that it is therefore in the best interest of employers to follow the letters of the law and international best practices where applicable in the disengagement of their employees based on redundancy. For us then at the National Industrial Court, we have long recognized that the banking sector is a sensitive sector, and so extreme care must be taken as to how its employees are treated. Accordingly, the termination of the employment of a bank employee with immediate effect suggests some wrongdoing, which the bank must justify. If the termination is to be upheld, if unjustified, the termination would attract more than the common law measure of damages, i.e., payment in lieu of notice. This viewpoint now has the support, at least, of the concurring judgment of His Lordship Oguwumiju JSC in Skybank PLC versus Mr. Adedokun Olusegun Adegun. Actually, the decision was given in February of this year. Additionally, over time, we have been able to strike down a number of banking practices given our jurisdiction and power over the application of ratified international labor standards and unfair labor practices. I'll give a few examples. 1. Given that an employee has the unfettered right to resign, relying on Section 34(1)(c) of the 1999 Constitution, Section 73(1) of the Labor Act, and the ILO Convention concerning forced or compulsory labor, Convention 29, which Nigeria ratified on 17 October 1960, we have ruled against what we call the Unity Bank Clause. The name is actually named after a case brought against Unity Bank, which found in that clause found in some employers' conditions of service simply states that you cannot resign if you are being investigated for a wrongdoing. So the Unity Bank Clause is a clause in the conditions of service where the employer reserves the right to reject the resignation of an employee simply because the employee in question is being investigated for an infraction. In any event, the absolute unfettered right to resign finds support even in Section 306, 1 and 2 of the 1999 Constitution in terms of constitutional office holders. What we have done is to strike down such a clause as being an aspect of compulsory labor. In other words, once an employee says, I want to go, you need to release him. Otherwise, anything he does after that is compulsory labor. 2, we also struck down a practice of an employer opening a virtual salary account for a claimant and 17 other employees. We held that this virtual salary account should never be accepted in our employment and labor relations, as it is demeaning to the dignity of the worker or employee, and so offends Section 34 of the 1999 Constitution. With the virtual salary account, what happened really was that an account was opened in the name of the employer, but for the benefit of a number of employees who were simply given cards to access the account. If you read the labor laws, employees are entitled to choose which bank they want their salaries to be paid into. 3, we not only assume jurisdiction over staff loans when banks give their own staff loans. Once such is reflected in the conditions of service, we frown on employers recalling staff loans at commercial interest rates where the termination of services of an employee is for no fault of his. We've seen situations where a bank would give a loan to a staff, repayment period is over a period of 15 years, 2 years into it, for no fault, at least disclose. We see a letter simply being written, your services are no longer needed. And because the employer has terminated the employee, he recalls the loan at now commercial interest rate and says, we are using your benefits to pay for the loan and hope that you find a way, if it does not pay all, to fit in the balance. We've struck down on such practices as being unfair labor practices. 4, we have also struck down as unfair labor practice a bank dictating to an employee where to invest his or her computed gratuity benefit. 5, further struck down as unfair labor practice is a bank unlawfully placing a lien on an employee's account or freezing the employee's account's domicile with it. Lastly, we have also held it to be unlawful the refusal by a bank to issue work reference in favor of the claimant. And when it chose to react, it stated categorically that it is not giving the work reference because the claimant is indebted to it. A reason that was false and misleading. So, while the categories of unfair labor practices are not closed, these have been given as illustrations of practices in especially the world of banking work that have met the disapproval of the NICN. The disapproval is a product of the new labor jurisprudence that is with us now, which it is in the interest of the banks to learn and imbibe. And as the courts have enjoined employers generally, it is in the interest of banks to conform with international best practices as obtained in the field. I thank you all for your attention.
Thank you very much, sir. That was quite enlightening. And I think we will still see you for the other sides that you managed. Thank you so much. Moving right along, I would like to invite Mr. Wale Abioye. He's the Partner Strategy and Customer Solutions, Advisory Services, KPMG Nigeria. Mr. Wale Abioye is a partner in the Strategy and Customer Solutions and Advisory practice of KPMG Nigeria, with focus on customer experience, innovation, and digital transformation in financial services. Over the last few years, he has helped clients across Africa to identify customer and revenue growth strategies and keep pace with the latest emerging technologies to create modern customer-centric organizations. Wale is the project lead for KPMG's annual banking industry customer experience survey, BICX, which has run for over 15 years. He is a core member of KPMG's digital transformation team and regularly provides insights on financial services and emerging technology trends at several panels and C-suite sessions. He is a guest speaker at the 3rd Acamb'S National Stakeholders Conference. You're welcome.
All right, so good morning again, everyone. It's a pleasure to be here. Thank you for the invitation to share very quickly with you this morning before the panel discussion. I was speaking on a theme which is building bridges, collaborative solutions for trusted banking and financial services experiences. So that's the topic for today. I'll take a slightly different slant from the Honorable Justice. My my focus is slightly different. So what I would share, if we go on to the next slide, I'll give you a sense of what's changing within the banking environment, because our focus here today is on customer experience. I would also talk about the pillars of trust, because I would say that's the key word for our conversation, and I'll share some key imperatives afterwards. Now, there's a quote I'll start off with from the CEO of Salesforce. Salesforce is one of the most popular CRM solutions that I imagine a number of our banks here use. And he says that trust is a new currency in the digital world, and it's built through transparency, authenticity, and integrity. I think that's the frame for the conversation today. But because I know we also have people or our colleagues from pension, from insurance here this morning, I thought a good place to start off with is to give us a sense of where the industry is today in Nigeria. Just a few stats. When we look at the financial services landscape in Nigeria, we have about 61 million BVNs. When I look at the room, some of our banks now have 30 million, 40 million, 50 million customers. But NIB says we have 61 million BVNs. But then if you compare that to insurance penetration based on the most recent FINA survey is that penetration is somewhere around 3%. Now, some people dispute that it's slightly higher. But then I think the key takeaway is that when you compare it to banking, it's a really small number. And then if you extend that to pension, which is doing a bit better than insurance, you have about 10 million RSA accounts. Now, for me, the message here is our message here today, which is around collaboration. The need for us to work together to drive financial inclusion collectively within the markets in Nigeria. Now, but then what would financial services look like going into the future? Because as the CIBN president said, as bankers, we need to be thinking about tomorrow as well. As we think about today, we think about tomorrow as well. We believe that financial services going forward would be more integrated into our lifestyles. And we see a lot of that happening already today. So we'd see more lifestyle integration, whether in terms of payments, whether in terms of shopping or education, all of those things. Banking will be more integrated into your lifestyles. It would fit within our context at any point in time. So wherever you are, banking will come to meet you. Financial services indeed will come to meet you. But then at the middle, which I'll talk about later on, is the fact that as we go into the future, resolution would also continue to be important. Because as things go wrong, as they sometimes do, resolution will be important. But the difference is that resolution will be more proactive. Resolution will anticipate what might go wrong with customers. Banking, as we know now and going into the future, would be more automated. It will be intuitive. Banks would understand what you're looking to do even before you think about it. And we already see instances of that in our markets here and internationally as well. Banks as well will continue to be the pioneers of trust and security. For all of the slack that we give banks, when we do the survey, we still find that many people still trust banks. Now, they're not happy with banks, but then if you ask people where they will keep their money, I think they will still keep it in the with many of our banks. And then importantly is that going into the future, banking or financial services will be more proactive and it will be forward-looking. Now, how would that evolve or how would that play out? On the next slide, which is what we already see happening now, where banking of financial services becomes integrated with the rest of our lifestyles, it becomes more encompassing. So whether you're getting married or you're sending your children to school or you're buying a house or you're paying your electricity bills, you would find financial services integrated in all of those areas. Now, as we talk about trust, what does this mean? This means that, no, sorry, just go back to the previous slide. What this means is that the way we think about customer experience today then becomes totally different. Because your customer journeys, which typically will start at onboarding or when your customers come to your branches or download your mobile apps, no longer become the case. It may then mean that you are only a participant in a journey. It may mean that a journey starts with somebody else, maybe another bank comes to you. It may start in the church, it may start in the mosque, it may start maybe at the supermarket, and then passes through the bank and goes on. Now, what that means for us as banking practitioners or financial services practitioners is that the mindset to experiences, the mindset to dealing with our customers then becomes totally different. It means that if you're going to deliver great customer experience, you necessarily have to be working with a lot of other people. I know for many of our banks today, we're all doing partnerships with different people, airlines, hospitals, the payment gateways, and all of those individuals who sometimes have issues, but then your customers take out the frustration on you. And that's what it means going forward, that you have to collaborate with all of those third parties. Today, we do bank assurance. Today, we do buy now, pay later. What you have on the screen is just a classic example of what partnership looks like. A number of our banks now have the buy now, pay later product. And if you look at this is a schematic. You have your customer as one end. There's someone else who is the issuer. There's someone else who is the acquirer. And then when you look at the merchants are borderless. Now, what that means is that any of these actors can influence the experience of your customer. And it means that you then need to have a framework for working effectively with all of these third parties to deliver great experience to your customers. Now, I'll take a slightly different tone, just going into the future. I'm sure we all now are talking a lot about artificial intelligence. And some people say that in the future, life without AI will be like life without electricity. And that's becoming here and now. Now, what does that mean? It means that we're seeing a lot of opportunities. If you go on to the next slide, particularly within banking and within a number of the businesses we play in, where AI is offering opportunities to enhance the customer experience. So for many of our corporate communications or corporate affairs colleagues here, I imagine that some of you are writing your newsletters, you're writing your articles now using ChatGPT or some other form of AI, for instance. And maybe if you're not, then you might want to start doing that. I see some of our HR colleagues as well using AI to review CVs, using AI to write letters to people and all of that. People are using AI to generate content as well. So we would see a lot of the impact of AI in shaping customer experience. There's a technology company today that has developed a solution that allows you to even create your social media ads just using artificial intelligence. So it's ingest all of the information around what you are doing, the history of your campaigns, how successful they've been, how unsuccessful they've been, takes all of that knowledge and then begins to recommend the types of ads that you should put forward or put out to your customers. So that's the future of customer experience as we see it. But then AI as well presents some challenges as well, because we're talking about trust. It also presents some trust challenges. If we go on to the next slide, and then the next one. This is a classic example of what you might see happening a bit more in the future, because today we're talking about trusted financial services. So this is one example in Hong Kong where some people used AI to generate all the application forms for taking a loan from a bank, everything, the IDs of individuals, modified their faces to look like the customers that they were impersonating, and they got loans from the banks as well. Now, what that means is that as communications professionals, you then begin to face a different type of challenge. So on one hand, you're getting the benefits, but on the other hand, you begin to have issues because your customers call you and they are complaining about impersonation, they're complaining about fraud and things like that. But on the flip side, we're also seeing the value of the same technology that fraudsters are using to upset the customer experience. This is one technology company that's raised about $11 million. And if you have Shazam on your phone, how many of us are familiar with Shazam? You know, Shazam listens to music for about 3 seconds or thereabouts and tells you the song. Now, what they've built is the same technology, which is called acoustic fingerprinting, that allows you to listen to someone's voice for about 2 or 3 seconds, and then you can tell whether it's a person or not. Now, this technology now is being used in contact centers because when people call and it's not that customer, within about 2 or 3 seconds, you can tell whether it's a fraudulent individual or not. So let me come back to where we are today in terms of customer experience. So KPMG runs the annual banking survey. We've done that for close to about 17 years now. And when we look at the data in the last few years, we see that customer experience has been somewhat challenged, particularly within the retail segment in Nigeria. So you would see the industry scores for retail below 75 up until last year. Now, good organizations will have scores in the 80s. The fintechs that we surveyed as well got scores in the 80s. But the top-rated bank did not score up to 80. So just sort of telling you where experience is within the industry. Now, if I deep dive a little bit, so we use what we call the 6 pillars of experience at KPMG, and I look at the details of that. If you look to the left, the bottom left of the screen, you would see that the resolution lines or the resolution dots is one of the most inwards that tells you that as an industry collectively, we're challenged in how we deal with issues, how we deal with complaints. We know that customers are also placing more value on experiences with banks. So if we go on to the next slide, this is an illustration of, a loose illustration of what segmentation is like in the industry. And from the data, from the survey, what we find is that at the bottom where you have most of our customers, so maybe about 90% of the banking industry is in the bottom 2 pyramids currently. And for those customers, trust is at the core of the experience with banks. And trust expressed in the form of security, trust expressed in the form of reliability, trust expressed in the form of integrity as well. And you see that play out in terms of complaints. So if you go on to the next slide, you see the number of complaints in the industry. Now, this is a sample of the top 5 out of 6 banks within the industry. So this is not the entire industry. But we've just taken the top 5 banks out of 6. And you look at how complaints have gone up by 2 or almost 3 times just in the last 2 years. Now, when you look at the issues and we do the diagnostics, I'm sure the first word out of our mouths will be what? Technology. But then, granted or given that yes, we have technology issues, we have downtimes. But if you then look at it at the core, a number of things that a lot of us in this room actually have responsibility for. So things like lack of engagement, things like poor communication, things like low personalization, which then results in unmet expectations, and then ultimately you find the breakdown in trust. As communications professionals, we're at the core of managing communications, managing the quality of engagement within our various institutions, alongside our colleagues in CX as well. Now, what do customers look for when there are issues? What do customers look for? What are those pillars of trust? When things go wrong, what do customers look for? Customers are looking for transparency. They're looking for you to come clean on what the issues are. Up until maybe last year, I would say I'd almost never had a bank email an apology to the whole customer base. Maybe that's a signal that something is changing within the market. Sometimes customers just want you to own up and say, you know what, we haven't gotten it right. So customers are looking for transparency. They're looking for authenticity as well. Authenticity in the manner of communication as well. They're looking for credibility. So sometimes who exactly is coming out to engage? Who exactly is coming out to speak to customers? Who exactly is owning up for what is wrong? We've seen in many other markets where there's serious downtime, and then the CEO comes out and is at the forefront of resolution. So those are things that customers are looking for, and they're looking for responsiveness as well. You know, there's a saying that trust is earned in drops or lost in buckets, and that's the story really for many banks. Customers also want you to put them right. I'm not sure we have a widespread culture of compensation, and maybe the Honorable Justice, I would maybe say from his experience. But that's something that sometimes customers also need to have, where we actually quantify the impact of what has gone wrong and make sure that we're putting customers right or putting them where they should be. I'll skip the case study and go on to the next slide. You can go on to the next. As I begin to round off, how do we begin to build trust in our organizations or within the industry? It starts from inside of each organization. It starts from inside of each bank. It starts from the individual, where as individuals, where as colleagues, we begin to demonstrate integrity at the individual level. And then you go up to competence, where we begin to show that we understand what is going on and we're actually able to deal with it. And then as a group, as a collective, we begin to act in the common interest as well. And then ultimately the outcome you see is what you have as the reputation of your different institutions. With colleagues, what else do we need to do? As communications professionals, it's important that we begin to unify around the customer journey. Working with many banks, what I see sometimes is that marketing has an idea of what the customer journey should look like because they're responsible for what the customer sees. And then technology has a totally different view because they feel there's a different way of doing it. And then CX also has a different view. But for the people in the room, I think it's important that as we go away from here, we begin to lead and unify our organizations around a common view of what the customer journey should look like. It's also important that we define clear communications pathways. Sometimes when things go wrong, you find that we don't know how to process different types of issues. I've seen scenarios where there's downtime and the relationship managers don't know. There are times where there's downtime and some senior people in the bank don't know. So it's important that we define and we lead the definition of clear communications pathways within our organizations. Every bank really should have an escalation matrix that caters to the types of issues that we're seeing now at the different levels of thresholds that we have. And then, of course, importantly, that we're sharing knowledge and resources across teams as well. With our customers, we go on to the next slide, it's important that we continue to invest in literacy. Sometimes the issues that customers say they have is because they don't know. They don't understand the pricing mechanism. They don't understand why certain events have happened within the bank that you are bound to do by regulation. So it's important that we continue to educate our customer bases. It's important that we're sharing information around data privacy practices as well. As we head into a future where many of us are looking to monetize data, many of us are looking to establish or form all types of partnerships and relationships, it's important that you're carrying your customers along on that journey. Investing in trust. When you look at some of the big technology companies, you find that they go out of their way, maybe because they are compelled by regulation to tell you what they're doing with your data. It's also important that we continue to put the customer in control. I've talked about transparency and honesty as well, and then listening to customer feedback and acting accordingly. With our partners, and I would say, as I said at the beginning, our partners are boundless. So regulators, other financial services players, technology companies, even the merchants we work with. It's important that we're setting clear expectations for those relationships as well, and that on an ongoing basis we're evaluating them for alignment. But sometimes some partnerships need to start and they need to end as well. Because customer journeys would evolve, customer journeys would not in all cases be within your control. It's then important that we begin to wear a hat of co-creating with our partners as well. That we're co-creating solutions, we're co-creating experiences with them. We're sharing best practices and industry insights with them as well. And then, of course, we're proactively engaging our regulators as well. So I'll stop here so that our panelists can come. I hope I haven't overshot my time. And then we'll continue the conversation. Thank you.
Ladies and gentlemen, please put your hands together again for Mr. Wale Abioye. At this time, we will be introducing our panelists who will be doing justice to all that we have heard so far and also be sharing their unique perspectives. Promises to be a really engaging session. Okay, so I'd like to invite at this time Virginie Noah, Group Chief Customer Experience, Access Bank. Okay, I hear that she's not here at the moment. Okay. May we please put our hands together as we invite Shola Salako Ajulo. Shola Salako Ajulo is a foremost consumer advocate, a versatile communications, marketing, and media professional with over 3 decades of professional interaction with corporate and public brands that exposed her to the poor service culture and weak consumer protection structures in Nigeria. And this birthed her passion for consumer rights and protection advocacy since 2002. Shola is a member of the International Bar Association and a patron and fellow of the West Africa Associate of Customer Service members representing Southwest Region on the Pioneer Competition and Consumer Protection Tribunal, CCPT, Abuja. Please put your hands together again for her.
Also on our panel today is Lande Atere. She is the Chief Customer Experience Officer of First Bank of Nigeria. Lande is recognized as a global female emerging leader by the U.S. State Department Fortune Global Women's Program. She is a self-starter and goal-driven professional with significant exposure and expertise in leadership and talent development, operations, automation, value creation, ideas origination, design thinking, customer experience management, change management, corporate social responsibility, human capital development, regulatory relationship management, and project management and implementation. As we said earlier, she is currently the Chief Customer Experience Officer at First Bank of Nigeria Limited, and she has graciously come to impact us at this session. Please welcome her.
We also have Oguche Aguda on our panel today. He is currently the Chief Executive Officer of the Pension Fund Operators Association of Nigeria, PENOP. In this role, he leads the efforts of the $28 billion pension industry in Nigeria in engaging the regulators, the media, financial markets, and other stakeholders in order to ensure that the interests of the pension industry and pension operators are protected. and also in ensuring that the pension industry has a positive effect on national development. He possesses a degree in banking and finance from the University of Lagos, Nigeria, and is a fellow of the Chartered Institute of Bankers of Nigeria, CIBN, and an associate of the Chartered Institute of Stockbrokers, Nigeria. Welcome, Ogechi.
We have, or we should have, Mr. Stephen Alangbo, the MD CEO Cornerstone Insurance here. He's ably represented by the General Manager IBD, Mr. Charles Wachuku. If you're here, please join us, sir.
I'd also like to invite at this time Ogubunka Nwauju, PhD, ACIB, who's one of our panelists today. Ogubunka was the former registrar, CEO, Chartered Institute of Bankers of Nigeria, CIBN, a financial management expert, publisher, and has also distinguished himself in the areas of public relations and image visibility and optimizations for the country. Over the last few years, his contributions cut across socio-economic development, Financial Institute Training Center, Lagos, Lagos School of English and Mathematics, Central Bank of Nigeria Training. He's a member and editorial board of various journals, belongs to several professional associations, is a member of the Institute of Management Consultants, the Institute of Chartered Mediators and Conciliators, and many more. Please put your hands together. Welcome, sir.
Moderating this session is Bukola Oluyade. Bukola is an accomplished banking executive with an MBA from the University of Liverpool. Her over 20 years career spans strategy, corporate communication, strategic marketing, business development, and customer experience across sectors. Bukola is skilled at leveraging customer insights and strategic partnerships to drive business growth. As Polaris Bank's Group Head of Customer Experience and Sustainability, she leads digital transformation initiatives to enhance the customer journey. Previously at First Bank, she spearheaded multi-country brand strategies and marketing. A fellow of NIMN, that's the Nigerian Institute of Marketing, amongst other professional bodies, Bukola is an associate member of WIMBIS and chairs the Chartered Institute of Bankers Lagos State Branch Publicity and Sustainability Committee. Her expertise across domains solidifies her stature as a top banking professional. She's bringing along with her multi-skill perspectives to bear at the third Stakeholders Conference, and she will be moderating this session. Let's celebrate everyone that's here, and let's look forward to a wonderful time. Thank you.
All right, okay. We get that. So we've been we've been briefed. Thank you, Funlola. Just a very quick recap. The two legs we're standing on today is the first one, which the Honorable Justice spoke about, wherein is how do we relate to our customer from the point of charges and some of the other relations we have to do with customer, and how do we relate with our employees who are the internal customers. The second leg of our conversation, which is really the customer experience pivot, was led by Wale Abiyoye, our partner at KPMG, and he led with the discussion around trust. How do we build trust with our customers? What is the import for the customer today, and how does that drive experience? And ultimately, why are we in business? How does that bring transactions? How does it drive profitability? And does it keep us in business? And we would also have a multi-industry perspective, because there's insurance, there is pensions, and then we have the consumer protection leg. Yes, ma'am. Please don't invite me next week. So, ladies and gentlemen, I would start by calling us to give our perspective for about 5 minutes each, and then we will look at some focal points that we need to address so that we bring the succinct issues forward and we all leave here more enriched than we came. So, ladies and gentlemen, permit me to start from my extreme right. Mr. Charles is representing insurance, right? Fantastic. And you know, insurance has come around a full circle of insurance that we used to know back in the days. No one was doing insurance. Life has changed. Insurance has come to town, right? Insurance is on the front burner of things. So would like to hear your perspective. Customer experience, customer arbitration. How does insurance see this? Thank you very much.
All right, thank you very much. Apparently, when I discussed with Mr. Rashid, I'm also wearing different caps. In as much as my CV is not here, I've worked in the bank and I've also worked in pension companies before joining insurance. Insurance is all about covering risks, all right? So you are relaxed in case if that risk should crystallize. So insurance has to do with trust. I will start with that because in the industry, we'll talk about claims, payment of claims. So if you don't, insurance is all about paying claims in as much as you have to make profit. If there is no trust, of course, insurance is not really like banking in the sense that at the end of every year, you have to renew your policy. Your policy has to be renewed. So if there is no trust, the commitments you made, you were not able to keep it, of course, the customer will not come back to you. So we talk about, when you talk about insurance, you talk about trust. The regulators does not take it easy with insurance companies that are not able to keep their promise. So starting from the brokers, the underwriters, the reinsurers, we all know that trust is the way to go. If you've written a policy and the risk at the end of the day crystallizes, of course you must be able to pay the claim. If you don't pay the claim, there are issues of arbitration. Of course, you don't want to go to court with your customer. It's a very negative thing to do. Of course, the regulators are also there to check the kind of things you are doing. Just also to let us know the kind of things I saw when I came to insurance. I was in the bank and I came to insurance. The first ESCO I attended, I saw to deliberate on payment of claims of total of close to 4 billion. I screamed, are these people smoking weed? Or what is really going on? Right? Because in the bank, we're all looking at reducing costs. How do you reduce costs? But here, you have to pay claims. The claims are staring at us and it must be paid and all that. So it was hard across the industry. Insurance is all about paying of claims and you have to develop trust within your customer space. If you don't, you are built to fail. And of course, the regulators are there to slam you as soon as you have those issues unresolved. In terms of the staff, having our staff and all that, we try across the industry. We try to promote gender equality. If you don't want to have problem in insurance, don't have problem with Pillar. We have an association in insurance called Pillar. In fact, one of my colleagues is a member of Pillar. She's here. What will drive your volumes is your trust, like I've mentioned. If you are able to prove to the customer there was a claim, in fact, I also give one perspective of what happened to me when I joined. They say Igbos don't buy insurance. Yeah. And we are trying to conquer the Eastern market. That's Onitsha market. So most of them don't believe that you pay something, and if there is a claim tomorrow, the insurance will indemnify you and all that. Being an Igbo man on the score of Cornerstone, I was told to go to Onitsha to champion that cause. And we had to prepare checks, dummy checks. When Onitsha market caught fire, we prepared checks just to show them that this thing works, is real. It's not all the things you hear on outside there. Some of them are unfiltered information and all that. So we got there, and we are calling names. We had 50 people to pay claims that day, and we are paying and all that. And I noticed there was, those that their claims were paid. We are also doing some sort of guide to the people that suffered loss. And I had one young man in Onitsha and all that. He was just settled by his boss. And, in Onitsha, they do this kind of Eba boy kind of thing, which we call it, and all that. And he stocked up his shop, and the fire came and raised down, when the fire came. So he has to start life afresh. And the people that got their claim checks, we are telling him, if you had done this, you will not. So you find out that there is this gap in the industry. What will drive your profitability, your volumes, is, the trust your customers have in you. Thank you.
Thank you so very much, Charles, for speaking to the issue around trust and the examples that you gave us, which I'm sure quite a number of us may have even seen, but hearing it firsthand, and when you hear the volumes and the value of money involved, it can quite, shake you. However, he did not speak to the claims that comes into their coffers in the billions and the trillions, the premium, which we pay, but it's okay, Charles, we'll come back to you. So, but it's just germane to understand that as you sow ahead for insurance in this particular situation, then you have something to fall back on. But for the customer experience part of it, the insurance industry is saying, you know what, we're building on trust. We want you to trust us and come and insure your property and your business. We're coming to a next level, which is, let me say, the other side of the insurance one, which is the regulator. Because remember that he spoke about regulation and how arbitration will come if they should fall short of meeting some of those claims. So we'll be going quickly to Shola to tell us a perspective of the customer experience stories and how you think, one, the financial institutions have been able to bridge that gap, because we're talking about building bridges today, and wherever there are gaps, what we need to do. And you have 5 minutes.
Thank you very much. I'll try. It's a whole lot of stuff to talk about. Like Charles said, I'm wearing 2 caps in this chair. I work with the regulator of sorts because I work with the tribunal, and we're the adjudicatory body for the Federal Competition and Consumer Protection Act. The commission is the regulator. The tribunal is the adjudicatory body. So we deal with cases. People come and file matters before us that has to do with the act, and we adjudicate on it. But before this present role, my life has always been about consumer advocacy. It's about speaking for the average consumers. And I think in that, my previous role, the sector that I had the most contention with was the banking sector. A few of you know me from all the trouble I have caused with the banking sector. But we're talking about trust. And I'm glad that Charles identified that the foundation of any kind of relationship in the marketplace with financial institutions is trust. Banks are no exception. Neither is pension schemes and finance, everybody in this sector, trust is so core. And I need to speak first for the regulator. I need to reassure the sector participants or stakeholders that there is no regulator in Nigeria whose aim is to hinder you from doing business or is to pull you down, because I get this resistance from a whole lot of private sector players that the regulator, they're always bringing regulation, they want to hinder us, they want to do this. That's not the aim of any regulator. I can tell you that if a sector participant, like any bank or financial institution, actually sits down and works into a system, a consideration of the relationship that you're having with your customer in such a way that you look out for the interest of the customer just as you are looking out for your interest, you will take the regulator out of business. They won't have anything to regulate. Because the only reason why we have regulation upon regulation upon regulation is because a whole lot of the sector actors are trying to scam people. You are trying to oppress them. You are trying to exploit them because you just want to make profit at the expense of everybody else. And that's the reason why government steps in to say, no, we can't allow you to keep behaving like this in the marketplace. We have to check you in this, check you in that. So if you are tired of too much regulation, you know what to do. Just be proactive. Do what needs to be done. Okay, you are asking me as a consumer to trust you. Now I'm talking as the advocate now. Because the essence of a regulator is to look out for the interest of the consumer. Government doesn't have any business with business. All government is concerned about is to ensure that there's a fair marketplace and everybody plays by the rules. It is when you don't play by the rules that you get government come down on you. And since there is a prevalence of not wanting to play by the rules, that's why we have a prevalence of regulation. And that regulation will keep coming until you start taking the initiative and start doing what you need to do. Once you start protecting your consumers, what does consumer protection agencies need to do? They just need to ensure that, oh, you're already doing it. There's no need for regulation. This has already been taken care of. Then the complaints will reduce. And when the complaints reduce, everybody is happy. You are making your money, the consumer is getting the service, and we're all happy. You know, just as an example, this morning, I have been getting a deluge of consumer complaints because they can reach me faster than they can reach any other government agency. I'm live there on social media. So every little thing they have a problem, please help me. Please, who do I go to? Please, who do? So I still do activism while I am in adjudication. So I've been getting a whole lot of complaints about these loan apps and scams and sharks and all these things. So I'm doing, as I'm talking to you, my NGO is doing a full-scale research on how can we intervene in this thing. And I thought that, why do people go to loan apps? Regular banks are also giving quick credits. Are they not? Are you not? But why are consumers not patronizing? Why are they going to these people who will come and start swearing for them and swearing for their family? And why are they not going there? So this morning, I was on my app trying to do a transaction. And I was scanning through the app and I saw quick credit. So I thought, oh, this is interesting. Let me experience this thing myself so that I can have something to convince consumers that trust the banks. They are better regulated. They have the structure and they won't abuse your father. So I got into the trap. I followed the instructions and co. You want that? We can give you this amount of money, about 700,000. Instant. I said, oh, that's interesting. Maybe they say they don't give instant. Let me follow through the process. I followed through the process. And I noticed that they told me, we'll give you the whatever, we'll give you this percentage of interest. You don't have to do this. They just told me all the nice parts and say, just approve, and we'll approve it. Now, what they did is at the bottom of the page, there is this tiny button that says, I agree with all the terms and conditions, and terms and conditions are highlighted. So I'm supposed to click it and all that. That's what you assume. I'm an enlightened consumer. This is me, who is the chairman of consumers in Nigeria. And I did not see that button. I didn't see the terms of the button. I just turned it on because I was like, oh, they're going to give me this money so I can prove that they can do it. Anyway, I did that. As soon as I clicked that and they just said, loan approved, I thought, where is the document about terms and conditions? Where is whatever? They just said loan approved. In 2 minutes, I had 700,000 naira in my account. And that was when the drama started. My email just started hearing, all the documentation was now coming after the fact. After the fact. So I took time and read all this documentation. Of about 30 terms and conditions that I saw, ladies and gentlemen, not one talked about protecting me as a consumer. Everything was talking about protecting the bank. Now, what did they do? Because I am now the enlightened consumer. That's how come I could identify this. The average Nigerian consumer won't even know what I'm talking about until they start putting them under the pressure. I now found out that one of the conditions was that when I said I agree with all your terms and conditions that I didn't see, just so that I can get the loan instantly, in the condition it says that I agreed to waive my rights to a 48-hour cool-off period that is mandated by CBN Consumer Protection. CBN Consumer Protection says if you are taking an offer from a bank or a financial institution, you have a right to 48 hours when you can reject the offer. Okay? They put in that clause that I have agreed to waive, yes, and it's a major bank. They put that I have agreed to waive that cool-off period. So I am stuck with it. Now, I am stuck here because I'm about to cause trouble. I am stuck here because I want to go back and say, I don't want the money. I didn't need the money. 48 hours would have, I know, please. 48 hours would have allowed me. But because they say I've waived it, I don't have that 48 hours anymore. So even if I now go pay that money, I must pay it at 18% interest. Even if I pay it within 24 hours, I must pay it at 18% interest. That bank will see my face. So what I am saying here is, how do you expect your consumers to trust you? When basic things like that you know they will not look to, they don't know, you take it away from them. How? This is the bottom line of the problem that we have in the industry. If the banks and the financial institutions start to do what they need to do, look out for my interest, I look out for mine. When you give me some leeway and take some leeway, nobody is going to challenge you to say, what are you doing wrong? That's where I want to stop.
Thank you so very much. Nothing like when you experience it. Oh, I mean, that is it. That is really where the issue is firsthand. How do we ensure that those tiny prints have actually considered the consumer? And then, so there's something CBN does, and maybe they are not carrying it to those loan apps. There's certain things you can't put in tiny prints anymore. So it's the regulator to also do a widespread work. So I'm saying that surveillance needs to be really strong and cuts across. They will come at you and check that your forms and your conditions are not less than 10 whatever, the size of your fonts and all of that. So we should not hide under non-disclosure or hiding under some terms and conditions. Okay, I'm going to the next person now so that she can look at issues around engagement, resolution, and how the banks actually, do consider the consumer. Landia Terry, can you please talk to us? Thank you.
Okay, thank you very much, and good afternoon. It's very difficult as a banker to speak after the last speaker. But I think that sessions like this are very useful because more and more we need to have more dialogue, right? We need to talk some more because I mean, I don't want to go with the local parlance that says there are two sides to a story, but the truth is, that's what it is. Now, every month, I engage millions of my customers as a bank. And because we said to ourselves that the voice of the customer is extremely important. So we ask our customers, what do you want? Now, we've been around since 1894. We've come a long way from armchair banking to digital banking, okay? And it's also been a journey for us as a bank. We've learned many mistakes. We've learned from our competitors who no longer exist, and we're still forging ahead. Remember that we have stakeholders, we have shareholders, okay? So we're in the business to make money, but also satisfy our customers, which is why we speak to our customers. Now, my customers tell me, they tell us, I want convenience. I don't want to come and sit in your branches for hours, right? The customers say, I want easy. I don't want 10 pages of a form. Make it quick. I want to transact with you very quickly. The customers say, I want speed. I want you to approve my request immediately. And the customers say, I want convenience. In the comfort of my home, I want to transact with you. I want to be in the lounge at the airport. I want to be in the salon doing my hair. I want to transact anytime, anywhere. Empower me. But the customers also say, I want integrity, right? Whatever you're doing, make sure you're telling me the truth. If you tell me the truth, I can say yes, I can say no. And then last but not the least, right? The customers say, I want security, okay? I want you to protect me. Whatever I am doing with you, even if you are giving me all these things, make sure that my funds are safe with you. In response, as a bank, we keep thinking, how do we meet all these needs? And don't forget that banks are in the middle of the market of Nigeria, in growing Nigeria, right? So we're looking at what is happening externally, and we're looking at how the world is moving. There is China, there's India, there's the US. Now, how do we compete? Even outside of the banking sector, people are demanding for payments and services very quickly. Some SMEs want their transactions done very quickly because they say time is money. Now, what I've found that is interesting is that the banks are moving at a very quick pace, but faster than education is moving and faster than the standard of living is improving. Now, what does that mean? We have a lot of unsuspecting customers, which means that we've done our own bit, but as we're innovating and we're moving very quickly, the fraudsters are doing the same thing. So the biggest challenge we have today when it comes to innovation and engagement is customers who are not as enlightened, customers who are not as educated, customers who are not exposed, and then they are falling prey to so many issues. That is one. Number two is also capacity. Look, when people complain about the banks, we don't work in isolation. We have what we call switches. Anyway, I'm talking to an informed audience. So you know that the banks don't just process their transactions themselves. They depend on switches. They depend on third parties. The beauty of engaging with our customers, and that's something I keep saying, I also serve as my bank's ombudsman, which means that I sit down when a customer has a complaint. I can say to the business team and say, nope, we are refunding this customer. Okay? We do that many times. Because what we keep saying to ourselves is customers are not saying banks will not make mistakes, no. But customers are saying, when you make a mistake, can you please acknowledge it? And can you please say sorry to me? Okay? So when my friend here, partner in KPMG, was saying banks are apologizing, I said, excuse me, we've been apologizing for a while though. We have. But the thing is, more and more customers are saying, don't hold my money for 1 month or for 2 months. When there is an error, reverse it, okay? And tell me sorry. You too, you're a bank, say you're sorry. So I find that my customers enjoy the fact that a big bank like First Bank is saying, I apologize. So we've learned to start our emails. When I talk to my customers, I've learned to say, I am so sorry for the inconvenience. And I find that that helps the customers calm down. I think that to talk to my sister in the regulatory bit, of course I know of her. I don't think banks are afraid of the regulators or don't want to work with the regulators. Several times we sit across the table, but what we ask for is, the regulators must also understand what customers are asking for. Because it is customers that are asking for all these things, right? And then there are different connections. How do we as Nigeria give customers everything they want without inconveniencing them? It's the question we ask ourselves. Inconveniencing in terms of trust, inconveniencing in terms of integrity. Like you said, I don't know what bank it is, but everything we do, CBN tells us this is the minimum font you must have. So you cannot make it less than 10. It cannot be. Which is why even as a bank, we try to reduce the forms that we have. But because CBN said no, the font must not be less than 10. And so that customers can read it, they agree to it, and then we can make that progress. I think that this dialogue is good. What I keep asking our regulators on the other side is that we must do nothing to take away the trust of the banks. Because Nigeria cannot progress if you don't have banks. Nigerians will not be on the map if you don't have strong financial institutions. The institutions are strong only because customers trust them. We have some customers who've been with us for 70, 80 years, and we're doing a series. There are some customers whose parents opened their accounts for them, and they're still with us. And the biggest thing they have with us is trust. It's also security. But we also want to make sure we don't get lost. So what I want to keep assuring the public is that my trust index, there's a question I ask my customers: do you trust us? It takes 15% on my scorecard as Chief Customer Experience Officer, because we said to ourselves as a bank that there's a lot of competition out there. People are doing a lot of things, but we are first bank. Being solid and staying solid is the most important thing to us. So that trust index is so important to us as a bank, because without trust, how can you have banks? But that is not to say we don't get it right, that we get it right all the time. But I think this is an opportunity for us to all work together. Okay? What are we not doing well? And who should we really be talking to? So we have the regulators. How can CIBN also collaborate as well? How do we make sure that all these issues we're dealing with? Because I don't think there's any bank that just wants to be a Shylock and not please their customers. More and more we're saying customer experience equals to profitability. Honestly, I was doing an analysis with my CEO. Do you know that the happiest customers that we have, the most satisfied, are the most profitable for us as a bank? So you cannot divorce the two. So for me, I hope that there will be an outcome from this where we have many more engagements.
Excellent, excellent. Thank you so much, Lanley. You just nailed it. From engagement, which is the voice of a customer, to resolution, to providing what the customer wants, but what are the implications for that? And we then come to the area of in-depth customer education. I like the way you put it, that we have customers who are not so exposed. You know, they are learned and they're very literate, but to the issues that impact banking and how they keep themselves safe, they may actually not be. So we need to do a lot more there. And you also took it to the point of collaboration, which is what is taking me to my next speaker, which is Uguche, talking from the pensions point of view. Where does all this aggregate? You know, we've talked about trust on this side. I also need to trust that my pensions will not go into certain investments that, you know, and all of us are your customers, so we lay you at the gate here now. So we need to hear how you take it forward from that bit. You know, what are we asking for? What have you provided? How does trust come into play? And what is the role of the pensions group in all of this? Thank you, Uche.
Thank you. Thank you. Thank you for Acamb'S for inviting me. I think, you know, as a country, when it comes to pensions, most of us, whether we have our dad, our mom, our auntie, who have been with the old pension system. So in our minds, when we hear pensions, we hear of people queuing, we hear of delaying my pensions, we hear of fraud. So that's in our psyche. And even when I engage with customers under this new pension scheme, it's the same thing they have. And when you try to explain to them, they say it's a lie. You know, you hear the general pension is a scam. And that has been something we've been trying to counter. But I think, you know, we need to do more. So we engage a lot with the pension correspondents. I see some of them here, finance correspondents, to let people know sometimes pensions can be a bit complex. And when I engage with colleagues, I try and tell them we need to simplify these things because most of the people that are managing pensions, have worked for years, whether it's investments, returns, compounding. The average Nigerian doesn't understand these things. So we need to be able to break it down and let people trust us, right? You were talking about recently and items in the news about using people's pensions for investing in infrastructure and things like that. And someone who used to work in the pension industry, she saw me recently and she says, "Oh, I was waiting for you to issue a statement that my pensions are safe." And I was saying, if you who work in the industry are asking this, then how much more? But I think we need to do a lot more as an industry to educate people, especially with the pension system we have. Last weekend, we hosted federal lawmakers, legislators, and one of the things they always ask is that, pension funds, financial institutions generally, we make a lot of money, we keep the money doesn't go to the end user. And I told them that if any of you has a pensions account, if you check the pensions account, you'll see how much you have contributed and you'll see how much the pension fund has made. It's also regulatory. Acamb'S says we must do that. So for everyone that is investing in, has a pensions account, you can see how much your money has generated for you. And I think it's something that we need to do more, just in terms of educating, just in terms of simplifying, and just in terms of letting people engage with their pensions throughout their lifetime. Most people is when you retire, maybe when you get to 60, or depending on retirement age, that you now begin to think of your pensions. But what we're encouraging is right through your journey. As a matter of fact, someone says you start planning for your retirement when you start working. You should begin to also think about how much do I want to get in retirement? What else can I begin to put aside? How much voluntary contributions? Because the money that is taken compulsorily is by law. But you can decide to say, okay, this is how much I want to have. I want to be a baller when I retire, so I'm going to be putting X more amounts in my pensions account. And we're working on things like that you can enjoy your money today. And I know that's one reason people can see their accounts, tens of millions, and they can enjoy it today. So things like mortgages. How can you, if you've contributed for about 60 months, you can use a portion of your pensions to be able to get a house. So you'll see more of that to see how people can enjoy benefits today, even before they retire. But I think, just jumping on what Lande has said, over the years, the financial industry and the banks have been, sort of a big brother to us, especially in terms of technology, accessibility. They've done a lot. And sometimes we don't acknowledge some of these things and we look on the downside. Because I see that a lot in pensions and people say, they talk about the negative aspect, people that haven't gotten paid. But we don't talk about the hundreds of thousands of people that have gotten paid. When I started banking, again, I was in the bank, customer service was about some ladies at the front desk, but now it's an experience, it's a journey, it's a career, right? And I think the industry, financial services industry, is taking that serious. Even in the pension industry, we've got people that are looking at data, looking at how much you contribute, the kind of things you want, and to see how we can do that more. So we might not be where the regulators want us to be, but I think we're far gone. And our final point, I'll just talk about illiteracy. And you spoke about how, if we're honest with ourselves, the financial industry has probably moved quicker than Nigerians, even in terms of literacy. And that's something we need to commend ourselves to. But so the challenge is, do we come down to their level or do they come up to their level? And that's what we need to do. And maybe if you listen on radio, we are doing some jingles in Hausa, Yoruba, Pidgin, and maybe we need to connect more and bring some of these concepts to the level of people to connect. But I guess we are committed, and we will continue to do this for the benefit of the customers. Thank you.
Absolutely fantastic. Thank you for that. And, we're about building bridges and finding innovative solutions. So it's, again, about what do you know of what is on the offer. So we need to increase that education. We need to increase our beat to let the customer understand the link between innovation, what we want to give them, what they want, and how the usage is going to be, which then boils down to the experience. And honestly, I know we're all sold to experience because we also are customers and we want to experience the best. So thank you so much for that. And I'm a pensioner. I'm a pensions contribution. I'm smiling on my seat. I see my alert and I like the fact, and as a matter of fact, I actually applied for my contribution for mortgage and it's been approved. So it's working, and we need to see more of that. People need to be able to find value in their contribution while they can do it. Let them not work for somebody else to come and enjoy. The last but not the least is the doctor himself, Dr. Uju Ugubunka. He's going to talk about the perspective of the bank's customer. I think so. You're just going to help us round this up in 5 minutes to say all of what we've said. How does this sit with us? What is that one thing that we need to do differently that's not been done in building trust and ensuring that our solutions sit well with the customer? Away with it, sir. Thank you.
Thank you very much. Distinguished ladies and gentlemen, good afternoon. Let me start by saying that I was invited to give a keynote address. And that is as holding the portfolio of the President of Bank Customers Association of Nigeria. And I'm sitting here as a panelist. There are two different things. But all the same, I will make the contribution. All of you gathered here, ladies and gentlemen, if there is anybody that does not have a bank account, can you show by raise of hand? If you don't have a bank account in this country, show by raise of hand. Anybody? So you're all my members. May you have a round of applause for yourselves, please. The bank customer has come a long way in this country and in fact elsewhere. Without customers, there is nothing like banking or bank. And that's the truth. Banks don't serve themselves. They serve their customers. And it is in their interest that they make these customers happy. Whatever they can do to do that will be very, very, very welcomed. And that will be serving self-interest. I had put in the paper I prepared that the problems of customers are induced by banks. They are all induced by banks. Banks do not obey the laws. They do not obey the codes in the industry. They do not obey the guidelines that have been set up by the regulators. And when you put all of this together, you find out that it comes to what experience all of us are having. I'm not very sure there's anybody here who hasn't had a complaint in one form or the other or what a bank has done to him or her. And if you can trace it, it is simply because that bank did not comply with either a law, a regulation, a rule, a guideline, or a code. Somehow we have tried to compartmentalize some of these things. And you find out that in corporate governance, for instance, there are several issues banks have as problems. That is within corporate governance. If you come to risk management, the same thing. If you come to internal control management, the same thing. Relationship management, the same thing, and so on and so forth. So if we must address the issue of customers complaining, banks need to understand that they have to come back home and ask themselves serious questions. Why are our customers complaining? What is the cause? Who is responsible? And then how can we find solutions? Again, like I said, if they can look at the laws that are within us here and testify that they have been complying with all those laws, I'll give them a mark. Ethics and professionalism It's a major issue, or there are major issues within the banking industry. As a matter of fact, it's because of the size of the complaints that customers are having within the banking industry that enable the regulators to set up what they call subcommittee on ethics and professionalism. Because we were bombarding the courts, the law courts, with cases arising from customer complaints within the banking industry. In order to relieve the judges, like my lord here, some of those issues, the regulators set up subcommittee on ethics and professionalism, which is being housed here in CIBN. And I can confidently tell you that the number of cases customers bring to that committee, if you mention it, everybody will be asking from where. When you go to banking regulation at CBN, they are also resolving complaints from customers. You go to NDIC, they are also resolving complaints from customers. So everywhere you go within this environment, the law courts, subcommittee on ethics and professionalism, NDIC, CBN, even ourselves as an association, we are also helping in resolving consumer complaints within the banking industry. What does that tell us? Does it tell us that the banks are doing very well? Apparently, the answer is no. I had suggested somewhere else that the regulators should set up a prize for any institution within the banking industry that we didn't receive a complaint from any of its customers within a year. Let us see whether that will be possible. Will any bank earn that prize? In a whole year, you didn't receive any complaint at all. Then you win a prize. That means you are doing very well. And I think that should be taken up, perhaps, by Acamb'S. Because it is very important to find solution to the complaints. We all say that less than 30% of people who are qualified to have bank accounts in Nigeria are actually having bank accounts. And that is also impacting on the economy. If we can get all these people 100% into the banking system, then of course we would have made a point and would have been making progress economically.
Thank you very much, sir.
So the idea is that banks have failed us as customers. That's the truth. And they must find reasons to make amends so that we can all move forward. Thank you very much.
Thank you very much for that input. And I would like to spin it on its head. One boss of mine would say, I'd rather see your resolution outcomes rather than you worry about whether complaints was going up or down. In fact, anytime you report that we have lower complaints, he says, are your customers tired of complaining to you? That the avenue for complaint should always be open. Because even what you have not done wrong may be a source of complaint. So I think we should keep that open, but rather let us work towards ensuring that the instruments and the mechanism for resolving these complaints are high. And to your comments, maybe the price should be for the highest resolution and maybe minimal complaints. There can never be no complaints. This is the age of technology. So, but again, that is the life. We take on the challenge and we know that the future can only be brighter. So I'm coming to this side. Can we have a round of applause for these panelists, please? Excellent, excellent contributions. Thank you for doing justice and for bringing your industry perspective. I'd like just one question from this side. The elders, I won't call you today. Elders, I'd like one question from this side and one question from this side. Okay, Mr. Vapora. Question from you, please. We have just 1 minute to take your question and answer, so please.
Thank you very much. Well, since I have 1 minute, I'm going to stand on all existing protocols. Now, I want to speak to the topic. Mine is not a question, just a side comment. And as a stakeholder and a member of Acamb, former banker, see myself as a banker. Now, I've crossed from the banking side to move to the media side. We just started a publication. In fact, I was just showing her a copy. This is the latest copy. And it's a research-based publication. We don't just write. We do research, consumer research. We interface every day with consumers on the road. We have a camera, we have TV. We go on the road and speak to consumers to get their direct feedback. What you see here says FinTech, tomorrow's banking today. We did the first quarter last year. We did a report where we asked consumers to rate banks, financial institutions. OPay, sorry to use the word, came number one. They were rated number one above all other banks. Part of the feedback we got, because I'm speaking to this topic, and I want to address some of the points that Lande made. I wanted to ask a question because you said you speak to your customers every day. I don't know what category of customers that you speak to. But I think the major challenge that we're having is speaking to the low end of the customers, of consumers. That's where a lot of money comes. We do bank things that they make more money from the top end, but those low end customers who are doing POS transactions, ATM transactions, they matter a lot, and they are the one that constituted this bulk of this complaint we're talking about. So I don't think, because when you were saying that they're asking for convenience, they're asking for quick service. When we spoke to those low-end customers, it's bordered on issue of trust, lack of trust. I don't want to go into some of the complaints that we got. So my point is that if we're going to build a bridge or build bridges we're talking about, Acamb, the key stakeholders have to look down and how to begin to address issues from the low end. That's where that complaint, where Shola is speaking from, that's where it's coming from. We got to look for how can we engage most of the customers that are below. How can we meet their need? They have a lot of trust issues, all right? I mean, she mentioned the issue about documentation. You see, so many of them don't understand it. And that's what I'm saying. I'm saying that today, Acamb needs to move away from managing facade, all right? Apologies to use the word, because we do manage our entity, we manage corporate organization. We're looking at the facade, we're looking at how good we're looking. We need to go into customer experience management, customer interfacing point, the POS point. That's where we need to take our attention to. And once we begin to speak to that area, we'll be able to address the issue of trust that is falling below. Thank you very much.
Thank you, Mr. Fora, for that contribution and all taken on board. And we actually understand some of what is driving why some fintech platforms would be more attractive. The responsibility of the regulator is to allow the same ease across the whole industry. If you allow certain platforms to do seamless settlements, then everybody should have the same. So once we have that, we will all be smiling, and those customers you are talking about, because we still have a lot of them with all the major banks, we need to take care of them. So there's a lot of work for all of us. Acamb, we need to take out of here the roles that each institution stakeholder needs to play here, and how it then impacts the customer, and what our outcomes will be. And a year from today, what will we be saying? What has this impacted in how the innovation that we're doing from our end, from my end, how she's arbitrating, what the insurance guys are doing, what the pensions guys are doing, and the consumers, how is it that we're bringing all of this together to ensure that the port serves everyone the way we want it. Ladies and gentlemen, I believe we have done a good justice on this panel to, discussing and bringing out the salient issues around these building bridges issues. Recall that we sought as Acamb'S to achieve few objectives, educate customers. I think what comes out of this will definitely do that. Foster collaboration, that goes without saying. Reinforce industry reputation. That's our job. And as all of us are concerned, from the way you've heard everyone speak about this, that's top for us. And last but not the least, to ensure compliance and encourage innovation. Ladies and gentlemen, it's allowed. We have gone beyond that time. If you promise me that it won't be past a minute.
Okay, I just wanted to suggest that Acamb'S needs to do more than this. I would like to suggest that out of the public eye, Acamb'S should organize fora where these stakeholders can interact on the level so you can take the outcomes of that and be able to implement it. Okay, so it's great that you have thought of that.
Thank you so very much. I was already hearing that deliberation going on because, again, as you hear, okay, this is what is important. As Mr. Fora is doing his own on that end, we take a bit of that, all the high-end or high-level ones that we're doing, and then we add the grassroots, meeting the various stakeholders, and the outcomes will be fantastic. Funlola, your mic is ready. Thank you, ladies and gentlemen. Thank you, Landy. Thank you, everyone. Doctor, thank you.
Thank you. Thank you. A big thank you to our panelists. Yes. Yes. A big thank you to our panelists. We're going to, whilst they're still on stage, we're going to quickly do a presentation to them all. I will hand over to Mr. President to do that.
Thank you. We want to show appreciation on behalf of EXCO and the entire members of Association of Corporate Affairs Managers of Banks. We want to appreciate our panelists for those wonderful perspectives that they shared, one after the other, in no particular order. Okay. Shola Salako Ajulo. Thank you so much, ma'am, for coming. We appreciate it. Thank you, ma'am. Lande Atere. Thank you, Lande. Thank you so much for that wonderful perspective you shared. Jide, you need to, Tolu, you need to come and do presentation. Dr. Uju, let me hold the mic and you do the presentation. Doctor, thank you so much for coming. We appreciate you. God bless you. Thanks for that wonderful perspective. Take the rest. So, Professor Pius, that's our president. This is his first outing. Acamb'S, we should consider ourselves lucky. You know, the president of the association, this is the first event he will witness. Thank you, Mr. President, thank you. I want to be in this photograph too, for the records. Thank you. Please come. Morolake, oh yeah, come. So that you'll be part of this photograph. Jose, where's Jose? Halima, please come. Because the president, we need to be in this photograph, all of us. Where's Jose now? Omede, please come. All the ESCO, please. So, next one. Jide, come and present this one. Uguche Aguda. Thank you. Thank you so much for coming. Thank you. Appreciate it. Thank you. Justice. We appreciate you so much for coming. Tolu, come and join us. Oh, yeah. Zena, come. Halima, please come. For our guest of honor. Thank you so much. Thank you so much for coming, sir. We appreciate you. You present it. Yeah. Thank you so much, sir. Thank you, sir. Do we have all the panelists? You want to say something? Okay. All the panelists, please, let's have the joint. Where is the... There's another plaque now. One more. Wale, our guest speaker. Wale, please come on. Please, a round of applause for Wale. That presentation was world class. Thank you so much, for adding significant value to our stakeholder conference. Halima, present it to Wale. Drop the paper now. Thank you, Wale, for coming. Thank you. Move closer. Where's Omede? Justice. Yes. Okay. President, where am I? Where's Omede now? Please come. Thank you so much. Thank you. Thank you. Lola? We want to, while we wait for continuation of the program. Is there no plaque for Cornerstone CEO? Cornerstone. Okay. Okay. While we are waiting to conclude the program, the director, one of the director of the Consumer Protection. Hello, sir. Please come, please, so that you'll be able to just give a perspective, from the regulatory angle. We yield the floor to you, sir, just to address us for 2 minutes. Thank you, sir. I'm told CBN Consumer Protection Directorate is also represented, the representative of CBN. So, you can have the floor for a few minutes, sir. Thank you, sir.
I don't know. Mr. President and ESCO. I just have, first let me thank you for the invitation, but to say little on the perspective of the Competition and Consumer Protection Tribunal. What I want to say are in twofold. First is that you don't earn trust, or that trust is not served a la carte. It is something that you must earn. And to earn it is to serve the people or your customers or clients, as the case may be, diligently. I listened to the conversations and I looked at Section 129 of the Federal Competition and Consumer Protection Act, which I'm sure most of you do not have. And I laughed when my sister was talking about somebody asking him to waive his rights. If you look at Section 129, you'll be shocked that you have no right to do so. Sometimes in Nigeria, we go and buy a property or buy material and you find that it does not meet the standard, you want to return it and tell you that you have paid, you cannot return it. Again, it's an offense. That you must get value for your money. But I want to say what concerns me most on the issue of bank is the attempt by BOFIA, the Bank and Other Financial Institutions Act of 2020, which attempted to oust the jurisdictions of the Federal Competition and Consumer Protection Act. Section 75 of that tried to attack Section 92, 94, and 98 of the Act. What were they trying to do? To say anything that has to do with merger and acquisition, that the Competition and Consumer Protection Commission have no right over it, and so only the central bank. But they did not avert their mind.